Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start the next problem, that is problem number 7 of general insurance company accounts. So far till the last video, 6 main problems and 5 short problems I've completed on this topic of general insurance companies. So in the last 6 problems I've explained you how to make the revenue account, profit and loss account and balance sheet of general insurance company. So all the 6 problems are on fire insurance. Now the 7th problem what we are going to do is of marine insurance. The only difference between fire insurance and marine insurance is the percentage of net premium to be transferred to risk reserve for unexpired risk. In case of fire insurance, 50% of net premium every year will be transferred to reserve for unexpired risk every year, 50%. Whereas in case of marine insurance, 100% of net premium every year will be transferred to reserve for unexpired. That is the only difference. Regarding all other points, exactly same, fire insurance or marine insurance. Now, before starting this 7th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready. Now I am reading out 7th problem. New insurance company limited is doing composite insurance business. The following balances pertaining to its marine business as at 31st March 2004 are submitted to you for preparing the revenue account for the year end. So we are not required to make any balance sheet or profit and loss account. Only revenue account we have to make, marine revenue account. So commission on reinsurance accepted. Already I told you, commission paid, that will be taken in schedule number 3. Commission paid, schedule number 3. In that commission paid, you have to add commission on reinsurance accepted and deduct commission on reinsurance ceded. So here second item is given commission on direct business. So commission on direct business means commission paid. To this commission, you add commission on reinsurance accepted. Then rent. Rent will be taken in the operating expenses. Schedule number 4. Schedule number 4, operating expense will take the rent. Postage telegram, operating expense. Staff salary and bonus, operating expense. Next page. Traveling expenses, same, operating expense. Schedule number 4. Motor car expense, same, schedule number 4. Printing and stationery, law charges, electricity charges, contribution to provident fund, up to contribution to provident fund. All these will be taken under schedule number 4, operating expenses. Then premium received less reinsurance, schedule number 1. Then commission on reinsurance ceded. So accepted you have added, now ceded you have to deduct. So commission paid plus commission on reinsurance accepted minus commission on reinsurance ceded. Depreciation, 4th schedule, operating expense. Loss on sale of motor car, same, 4th schedule, operating expense. General manager's salary, audit fees, bad debts, miscellaneous expenses. All these are the expenses which should be taken under operating expense, schedule number 4. Then claims under policies paid during the year, claims paid, that is claims incurred, 2nd schedule. Then reserve for unexpired risk on 31st March 2003, 13,67,000. Additional reserve for unexpired risk on 31st March 2003. So at the beginning of the year, we are having statutory reserve 13,67,000 and additional reserve 46,000. We may combine it. You have to consider the following information. Total estimated liability in respect of claims due or intimated as on 31st March 2003 and 31st March 2004 were 1,200 and 6,300 respectively. The meaning is outstanding claims at the beginning of the year and end of the year. Beginning of the year 1,200 rupees, end of the year 6,300. Already we know claims outstanding at the end of the year will be added. Claims outstanding at the beginning of the year will be deducted. The general manager's salary pertaining to marine department was 24,000. So general manager's salary regarding marine business is 24,000. Actually, how much is the general manager's salary given? general manager's salary given is 48,000. In the trial balance, total general manager's salary is given 48,000. But in adjustment, it is saying only 24,000 are relating to marine business. So we are preparing the revenue account only for marine business. So we'll take general manager's salary only 24,000. Make an additional reserve of 10% of the premium received in addition to the usual reserve required. So for marine business, usual reserve required is 100% of net premium. That is the usual. Apart from that, 10% on net premium is the additional reserve to be created at the end of the year, as per the code of the conduct in respect of unexpired risk as on 31st March. So very easy problem, very simple problem. Now see, new insurance company limited revenue account for the year ended particular schedule number amount, premium earned. In this problem, we are not given any income from investment or other income. No other incomes are there, only premium. So premium income 13,14,000. How we got this? I'll tell you here. The main complication is regarding this first schedule only. So be careful regarding this. So schedule number 1, premium 1. Premium received 9,90,000. No adjustment, no outstanding premium, no reinsurance premium, nothing, no adjustment for premium. So premium received is the net premium. Now add adjustment for decrease in reserve for an expired risk. Previous problem we have deducted. When we have to deduct, if the closing reserve is more than opening reserve. If the reserve at the end of the year is more than the reserve at the beginning of the year, then we'll deduct. But in this problem, what we are having is the opening reserve is more. The beginning of the year, the reserve is more. End of the year, reserve is less. Because you can see here, 9,90,000 rupees is the premium income. 100% of 9,90,000 is 9,90,000. 9,90,000. Whereas opening reserve, last line it is given 13,67,000. Apart from that, additional reserve also there, 14 lakh. So 14 lakh rupees opening reserve, closing reserve only around 10 lakh. So that means closing reserve is less. When closing reserve is less, we have to add. So beginning of the year 14 lakh 13,000. How do we get this 14 lakh 13,000? Add up both. That is 13 lakh 67,000 plus 46,000 is the additional reserve. Additional reserve 46,000. So you add up 13 lakh 67,000 plus 46,000. You will get 14 lakh 13,000. This is the beginning of the year reserve. Now end of the year reserve we calculate. So for marine insurance business, 100% of net premium should be transferred to unexpired reserve. Now 9,90,000. So 100% of 9,90,000 is 9,90,000. It is asking you additional 10% of net premium should be made. Last line it is given. Apart from the regular transfer, additional 10% of net premium should be transferred to additional reserve. Now 10% of 9,90,000. 10% of 9,90,000 is 99,000. So you add up 9,90,000 plus 99,000. 99,000 is the 10% additional reserve. You add up both, you will get 10,89,000. So 10,89,000 is the reserve at the end of the year. Whereas beginning of the year it is 14,13,000. That means end of the year reserve has come down. So we have to add. What is the difference between these two amounts? 3,24,000. 3,24,000 is the difference. Now this 3,24,000 should be added. So when it is added, if the closing reserve is less. Remember this point. If the closing reserve is less, then the difference should be added. So add up, you will get 13,14,000 premium earned. I have taken 13,14,000. Or now claims incurred, second schedule. So claims incurred here. Claims paid 6,53,000 given in the trial balance. Apart from that, claims outstanding at the beginning of the year, claims outstanding at the end of the year given in adjustment. The outstanding claim at the end of the year added. Outstanding claim at the end of the year 6,300 given in the adjustment. Add up 6,300. You will get 6,59,300 minus outstanding claim at the beginning of the year. This is also given in adjustment. So 1,200 rupees deduct. So 6,58,100 is the claims incurred. Here claims incurred 6,58,100. Now commission. Commission on direct business. Commission on direct business is 1,95,000. To this we add commission on reinsurance accepted and deduct commission on reinsurance ceded. So accepted is 1,86,000, ceded is 3,42,000. Deduct, we get 39,000. So 39,000 is the commission. Here I have taken 39,000. Now operating expense. All the expenses which are given in the problem will be taken under schedule number 4, operating expenses. Staff salaries, general manager's salary. General manager's salary 48,000 given in the trial balance. But adjustment it is saying only 24,000 are related to marine business. Only 24,000 is related to marine. So only 24,000 will take. Contribution to PF, traveling expense, car expense, rent, printing and stationery, postage and telegram, law charges, audit fees, bad debts, electricity charges, miscellaneous expense, loss on sale of car, depreciation. That's it. So these are all the expenses, operating expense. Total 4,79,700. 4,79,700. Now take the total. The total B is 11,76,800. This is the expense B. So A minus B, 13,14,000 minus 11,76,800, 1,37,200. 1,37,200 is the operating profit. That's it. So very simple, easy problem. I've explained all the points. Be careful regarding this reserve only. How to calculate the reserve. For marine insurance, remember this point 100%. Not given in the problem, but you have to remember according to IRDA. 100% of net premium plus it is given in the problem to make 10% of net premium additional reserve. So 10% of 9,90,000, 99,000. Add up both 10,89,000 is the closing reserve. Opening reserve is 14 lakh. When closing reserve is less, you have to add. That's it. So this is the end of problem number 7. Come on, now I am going to start the next problem, problem number 8. From the following balances of Hi-Fi General Insurance Company Limited as on 31st March 2004, prepare fire revenue account, marine revenue account and profit and loss account. This is the first problem in which we have to prepare the revenue account of fire department and also for marine department. After preparing the revenue account for both the departments, then we have to make the profit and loss account. Then survey expenses fire. This survey expenses will be added to claims. So the survey expenses are incurred only for fire. There are no survey expenses for marine. Then additional reserve opening. So opening reserve is given, additional reserve fire 50,000. Commission paid marine fire, separately it is given commission. Claims paid and outstanding. So these claims paid will be taken in schedule number 2. Claims incurred, separately given for marine and fire. Then fire fund opening, marine fund opening. This fund is nothing but the reserve. Fund means reserve. The reserve for unexpired risk, that is called as fund. So separately given for fire as well as marine. So these are the reserve for unexpired risk in case of fire insurance and in case of marine. Bad debts recovered, general. Bad debts recovered is an income. Bad debts recovered is an income. It will be taken as other income in profit and loss account. Then share transfer fees. Share transfer fees is also an other income. It will be taken in profit and loss account. Directors fees, auditors fees. These will be taken as other expenses. Other expenses in profit and loss account. Then bad debts. Bad debts are separately given for marine and fire. So bad debts will be taken under operating expenses. Schedule number 4. Schedule number 4 operating expenses are there. In this operating expense we take 2 items. Expenses of management and bad debts. Then commission earned on reinsurance ceded. Ceded means we have to deduct. So this is the commission on reinsurance ceded. It will be deducted from marine as well as fire. The management expenses are given. The management expense will be taken under operating expenses. Then marine premium less reinsurance, fire premium less reinsurance. This is nothing but the insurance premium received. The premium received on marine and premium received on fire separately given. This will be taken in schedule number 1. Schedule number 1, premium earned. Then profit on sale of land. Profit on sale of land is other income. It will be taken in profit and loss account. Similarly, miscellaneous receipts. This is also another income, other income. So it will be taken in P&L account. Then difference in exchange, credit balance. The difference in exchange is also one of the income. It will be taken under other income. Then interest, dividend and rent. That is the income from investment. And that income from investment will be taken in P&L account, incomes. Depreciation, general. So this depreciation will be taken under other expenses in P&L account. In addition to the usual reserve, additional reserve in case of fire insurance is to be increased by 5% of net premium. In addition to usual reserve means according to IRDA, 50% of net premium will be transferred to reserve in case of fire insurance, and 100% of net premium will be transferred to reserve in case of marine insurance. These are the usual transfer. Apart from that, in fire insurance, 5% of net premium will be transferred to reserve. That's all. This is the problem. Now, see carefully here. Hi-Fi General Insurance Company Limited revenue account for the year ended. Two columns I have opened. Instead of preparing separately two revenue accounts, one revenue account with columnar form. So two columns, fire, marine, schedule number, particulars, premium earned, schedule number 1. Now be careful regarding this, because normally students will commit the mistake in first only. First schedule only, there are more chances of committing the mistake. See carefully. Schedules forming part of financial statement, schedule number 1, premium earned. Fine. Separately I am calculating premium earned for fire and marine. So first of all, fire. Premium received is 6 lakh rupees given in the problem. Premium received 6 lakh. Now less adjustment for unexpired risk. Why I am writing less? Because end of the year the reserve is more than beginning of the year. So at the end of the year the reserve is more than beginning. That's why I am deducting. So end of the year how much? According to the act, 50% of net premium. How much net premium? 6 lakh. So 50% of 6 lakh, 3 lakh. Apart from that, the last sentence says 5% of net premium will be additional. Amount to be transferred to reserve. So 5% of 6 lakh comes to 30,000. Apart from that, already additional reserve is there. How much is the additional reserve? Already it is there, 50,000. Beginning of the year, 50,000. So 3 lakh plus 30,000 plus 50,000. So 3 lakh 80,000 is the total reserve for unexpired risk at the end of the year. At the end of the year. Now at the beginning of the year, it is given in the problem. The reserve is 3 lakh. Reserve is 2 lakh 50,000. Beginning of the year. 2 lakh 50,000 is the reserve, fire fund plus additional reserve 50,000. So total will be 3 lakh. Including additional reserve. This 50,000 is additional reserve. And normal reserve is 2 lakh 50. So total 3 lakh rupees is the total reserve at the beginning of the year. End of the year total reserve is 3 lakh 80,000. So how much difference? 80,000 is the difference. Take it in the outer column. Deduct less. So 6 lakh minus 80,000, 5 lakh 20,000. This is the premium earned for fire department. So 5 lakh 20,000 I have taken here. Now marine. Similarly we have to come to the marine. So for marine, premium received is 10 lakh 80,000 given in the problem. Premium received is 10 lakh 80,000. Now less adjustment for unexpired risk. End of the year. End of the year, 100% of premium earned. So 100% of 10 lakh 80,000 is 10 lakh 80,000. There is no additional reserve in case of marine. Additional reserve is there only in case of fire. Right? So 10 lakh 80,000 is the Reserve at the end of the year. At the beginning of the year, the reserve is 8,20,000 given in the problem. In the trial balance given, the marine fund at the beginning of the year is 8,20,000. Now difference is 2,60,000. Because end of the year it is more. End of the year it is more. So we have to deduct. Less. 2,60,000 deduct. 8,20,000 is the premium earned in case of marine. So I am taking 8,20,000. That's all. So 5,20,000 is A, 8,20,000. Now claims incurred. Now we'll come to the schedule number 2. Here you can see claims incurred, schedule number 2. The two columns I have made, fire and marine. See here, fire, marine. So claims paid is given in the problem, 1,80,000 fire, 3,80,000 marine. Apart from that, survey expenses for fire is given. Survey expenses for fire. Survey expenses are the expenses related to claims. Related to claims. So it is added. Survey expenses 10,000 to fire. No survey expenses for marine. So total 190,380. So you can see here 190,380. Now second one, commission. Schedule number 3, commission. The fire and marine. Commission paid is given 90,000, 1,08,000. From this we deduct commission on reinsurance ceded. That will be deducted. That will be deducted. Only ceded. Accepted is not given. If accepted is given, we would have added. Now we don't have accepted. So 30,000 deduct, 60,000, 48,000. 60, 48 I have taken. Now operating expenses consist of two items. Expenses of management and bad debts. So schedule number 4, operating expense, management expenses and bad debts. For fire, marine, add up 150, 412. So 150, 412. Take the total B, 4 lakh rupees is the total of B, fire, marine, 8,40,000. Now operating profit or loss. If you get positive, operating profit. If it is a negative, operating loss. Now check, 520 minus 4 lakh. 5,20,000 minus 4 lakh. 1,20,000 is the operating profit in case of fire insurance business. In case of marine business, 8,20,000 minus 8,40,000. You are getting negative. Minus 20,000 you are getting. This is operating loss. So in fire business, there is operating profit of 1,20,000. In marine business, there is operating loss of 20,000. That's all. Revenue account completed. Now we'll come to the profit and loss account. So profit and loss account for the year ended, two columns I have prepared. Inner column for calculations, then outer column. Now first of all, operating profit. Where we are getting operating profit in case of fire? How much operating profit? 1,20,000. So 1,20,000 operating profit. From this we can set off operating loss. So where we are having operating loss? Marine. How much? 20,000. So from 1,20,000 profit, we deduct 20,000 loss. So 1,20,000 minus 20, 1 lakh rupees is the net profit. Now, income from investment. In the problem it is given income from investment, interest, dividend and rent, gross 14,000. Other incomes, a number of other incomes are given like profit on sale of land, bad debts recovered, share transfer fees, difference in exchange, miscellaneous receipts. All these are the other incomes. Take the total, 67,300 is the other incomes. Now take the total, 1,81,300 is the total incomes. From total incomes, deduct other expenses. The other expenses are director's fee, auditor's fee, depreciation. These are the general expenses, not related to either fire or marine. It's a general expense. So deduct, 41,200 deduct, profit before taxation is 1,40,100. 1,40,100 is the profit before taxation. And nothing is given regarding taxation. So we can stop our solution here. That's it. So this is the end of problem number 8. So what is the new point in this problem? We are having two departments, two businesses, fire business and marine business. So how to find out the operating profit or loss? I have showed it here. That's it. All the points are same. So I have explained to the best of my ability. So hope you got all the points. You are getting more knowledge from these videos. If you are satisfied, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos, and lastly, don't forget to subscribe my channel. The next problem I'll do in the next video.